Welcome back to the second episode of the Gig Academy, where we discuss all things independent contractor related, what's on the horizon, and how you can best tackle any challenges that might be coming. Today, we're going to be discussing compliance and all things related with Rob Slack and Bryan Paulozzi. Rob, would you mind kicking us off with a quick bio?
Sure. My name is Rob Slack. I've been in the logistics industry since actually the late 60s. I started off as a helper on my brother's truck when I was 10 years old. I started my first courier company out of my dorm room in college back in 1976. Was one of the original companies into the U.S. delivery rollout in 94. I was one of the founding members of a company called NextJet out of Dallas, Texas in 2000. I was an investor and I served as president and chief operating officer of SCI for 16 years before forming Flexible Workforce, which we eventually merged and were acquired by Openforce. So here I am at Openforce and very happy to be here today. Thank you very much, Nick.
And Bryan Paulozzi, welcome. Thank you for joining us today.
Yeah, thank you for having me. Bryan Paulozzi, I'm the VP of Transportation at Risk Strategies Company. I started back in the industry, in the insurance industry, back in 2009 with Jeff Ice and his crew under the banner of Oswald Logistics. And we were a boutique agency specializing in the same-day delivery, courier, and last mile segments. Shortly after joining, we actually merged with one of our largest competitors in the space in 2010 and formed Brightstone Insurance Services. And during that time under Brightstone, we grew to become one of the largest insurance agencies specializing in this niche class of business. In May of 2017, our firm was acquired by Risk Strategies, which is a top 15 US broker based out of Boston. And they really brought us in to run their transportation division. And that's what we've been doing, myself and my team have been doing successfully for the last 4 years. We now represent probably about 2,000 same-day delivery companies across the country. We have products that are very unique and exclusive to us in this space, and looking forward to chatting more about that today.
Excellent. Thank you, Bryan. And thank you both for joining us today to talk about compliance. And compliance is definitely something that when I'm conducting business reviews here at Openforce with our clients, that it's kind of almost like Toby from The Office showing up. We will be having a great conversation. As soon as you mention the word compliance, there's a very solemn look on people's faces, and I kind of become the buzzkill of the party. So kind of to kick things off, Rob, when you hear the word compliance, since you've run businesses in the trucking and courier industries, what comes to mind?
Well, I mean, compliance has become so important in our industry. I mean, it's evolved, like when I started in the 70s, realistically, a guy would walk in, we would say, do you have a license? Do you have a car? And if he said yes to both those questions, he'd be off making a pickup 20 minutes later. The only requirement we really had was a full set of teeth rule. And we actually, had to waive that later on when driver shortage hit. But, compliance has really come a long way. It's like, trying to get your arms around compliance is trying to hug an octopus. It's just, there's so many tentacles to it. And it reaches, I specifically, I deal with the classification issue and the legal issue side of the independent contractor. And, compliance comes into play an awful lot, whether it's a classification challenge or a civil action. This is where, a lot of people get caught up in the fact that, they know that compliance is necessary. They know it's a really difficult task. They try their best, but maybe they fall a little bit short, and all of a sudden an accident happens, lawsuits start to fly, certain things get brought up in court, and you're basically on the wrong end of a bad decision. So, compliance is definitely, come to the forefront in everybody's mind, and it really ties into, the insurance market, as Bryan can attest to, the underwriters out there today, and, it goes all the way up to the reinsurers and, the Lloyd's of London's, and, the underwriting, the component of this has gotten so much stricter. The courier companies, the trucking companies really have to pay a lot more attention to not only just gathering up the information when they first onboard a driver, but then maintaining that information. And that's usually where, the companies have the most problem is, you collect it all, but then how do you track it? And how do you make sure that the license, the MVR you ran today, 6 months from now, he didn't get 2 DWIs in the course of that 6 months. So it's an ongoing process, and I don't see it getting any easier. It's going to get tougher, and it really affects insurance. So I'll let Bryan speak to that.
Yeah.
Yeah, appreciate that, Rob. I mean, when I think of the word compliance being on the insurance front, I think of the word headache. There's a lot of unnecessary back and forth that takes place between us insurance guys and compliance teams. And probably for the sake of this podcast, I'll take a lighter approach and say there's a lot of opportunity there on the compliance front too. I mean, as Rob was saying, the need for it is growing by leaps and bounds. And you're dealing with a situation where the motor carriers and the contracting carriers of who they're brokering a load to or they're subbing a load to are trying to create separation. The motor carrier trying to create separation from the subcontractor, and compliance plays a pretty crucial role in that. I mean, if we look at, for instance, the last mile delivery industry, we call it last mile 3PL. That's a growing class of business. And for years, they operated under what was called a master insurance policy. Okay, where you would take the 3PL to have a master policy. He would then take his contracting carriers of who he was subbing a load to, and he would schedule them on, and their vehicles onto his master policy, which was great because, there was no concerns as to whether or not these guys had the right insurance because they were all on one policy. Right. But that didn't help support the IC model, it didn't help create separation between the two. And ultimately, it led to a lot of adverse claims for the 3PL on their policy. So back in 2016, you actually saw a shift in that industry when a major insurance carrier said, we're not going to do this anymore. We're not going to offer that type of policy anymore. And that pushed these guys into more of these individual contracting carriers having their own insurance, meeting the requirements of these 3PLs. And hence, the need for compliance was really born in that class. And it's evolving, and it needs to evolve because, too much of the time, it's really what I would say boxy and rigid. These compliance personnel are being trained to just, check off a box as opposed to truly understanding the nuances of the coverage there. And I think that's where the opportunity comes in, educating people in terms of this class of business, what to look for more than just certain check marks on a box. So I mean, not to kind of belabor this, but even like if you take another industry such as courier or small parcel, that hasn't had, and Rob can certainly attest to this, the stringent compliance requirements. I mean, obviously you need the MVRs, you need the deck pages, but it's something where I think the gig economy is really shedding a light on that class of business. And it's something where I think the need for compliance is going to be more prevalent as a result. Claimants attorneys now know where to look more. I can tell you with certainty that, non-owned and hired auto insurance policies in that class, are seeing more claims than they ever have before. So underwriters are going to need to create more stipulations as it relates to, subcontractors and what insurance limits or policies they're covering as a result, which is going to further need to create the need for compliance.
Excellent.
Yeah.
So you mentioned something too, and I think it's an interesting kind of term, but what do you mean when you say getting kind of beyond that checkbox? Like, what does that look like in today's world?
Well, what I meant by that was, and really I'll focus on the 3PL last mile home delivery segment because it's very unique because the majority of your deliveries are being made beyond the threshold, okay, into the consumer's home. And not only are you delivering a product, but maybe you're setting up and you're having installation services as well. Too many times I've seen claim examples where, whether it be an in-house compliance division or something that was outsourced, where someone was just tasked with making sure these certain check boxes were met, but not really asking the right questions or paying attention to other things on the certificate that might cause a red flag. And then it's a situation where that contracting carrier doesn't have the insurance that he presented, and then the 3PL, their contingent policy, if you will, gets dragged into the mix and has to respond because it penetrates that layer. And that situation, when it hits my desk, I kind of look at it and I say, how did you miss this? right? I mean, because, I would have saw this and said, there's a red flag there. This might be fraudulent cert. We need to ask more questions. And that just comes from experience, not being tasked with just checking on the box. Right. I would sure you would find this interesting, but not all insurance carriers are the same. They're not all alike, and they're not all equals, right? They all have varying different forms. Yeah. And so how do you know an insurance carrier doesn't have a loading unloading exclusion on their auto policy? Or how do you know that the GL policy from an insurance carrier doesn't have some type of installation a warranty, or maybe excludes water damage as a result of faulty installation? Those things are not going to show up on the certificate of insurance. And that's going to come from a compliance team that's educated, has taken the time to know the nuances of the space. And that's what I really was getting at when I was saying getting beyond just checking the box.
Gotcha. Thank you. Thank you for explaining that, because I think that's really important, for me to know in my roles, but also for our clients, and even for the independent contractors to know kind of how the world they're operating in, and how they need to be and strive for compliance so they can do their contracts. So question for both of you, but Rob, I kind of want to hear from you first on this. But this is all pretty intense stuff, and as we're seeing, things are getting more and more intense with this current administration and legislation that's been passed, kind of the PRO Act hanging over everyone's heads. What's coming down the pipeline? So Rob, to kick this one off, are you seeing more companies bringing compliance in-house, or are they outsourcing to other vendors?
No, I see a lot more outsourcing that function, because it is so unwieldy for an in-house operation to do. I mean, if you've got 100 drivers and you're requiring, license registration, insurance deck page, TSA certification, HIPAA certification, you've got 10 particular documents you've got to collect on any given driver, and there are 10 different expiration dates on those. It turns into a big task for these guys to manage. So a lot of companies are really going to outside sources to assist with that program. And a lot of companies, I mean, in this day and age, with such things as the PRO Act, and people are looking for different ways to run the model. A lot of people are going to the master contractor model, and that kind of throws a whole nother light into the whole compliance issue, where, okay, I've just, I had 100 drivers, now I've got 10 master contractors, and I require that they submit to their compliance information on themselves and their company, but what about the drivers underneath them? Are they covered? And you could say, well, it's the master's problem. If something happens, it's not going to come to me. Well, guess what? It's going to come to you. They're going to find the deepest pocket in that line. And that's exactly where the civil attorneys are going to go. So when it comes to using master contractors, they don't want to exercise an awful lot of direction and control over a master to say, I want to see all this information on every one of your drivers, where they can use an outsourced company to say, we're going to pay you through such an Openforce, and, you're going to get paid through there, and we can require through the Openforce enrollment system that they submit all their documentation for compliance. We don't have to pay their sub drivers, but we can certainly track the fact that anybody who's working for that guy is in compliance.
And so then, Bryan, just a quick question for you, Bryan. Kind of you alluded to, the sometimes documents getting passed, some of these administrators for these companies on insurance where there's a red flag. With what Rob's talking about, would that kind of help cut down on those red flags then, even in what you're seeing?
Absolutely. I mean, I think to Rob's point, you're seeing more of the outsourcing of this type of service because, it's critical, and the need is growing. I mean, you could sit there and make a decision and say, well, if we keep it in house, we can save a few dollars maybe, because I can pay, somebody an admin type of salary to do this, and away we go. But I would sit here and say to you, well, what's your cost of doing business there? Because ultimately, if something gets missed, now you have the administrative cost you're paying the person, but you could also have higher costs in your insurance premiums as well, because claims are coming through the cracks that shouldn't be. Right. So, I mean, Openforce, to Rob's point, they're a tech company, so they're automating that type of service better than somebody could just sitting behind a desk. And I think that's important. I think we're going to touch upon that more today, is what technology brings to the table in this space and what companies like an Openforce can do in that regard.
Excellent. Thank you, Bryan. So obviously what we're all seeing in the news and what we're talking about here, the trend is moving towards more compliance being needed and really tightening up the screws of making sure everything's compliant. So next question is, Bryan, what is in it for the motor carrier, the freight broker, or any type of independent contractor that needs this? And will this eventually trend towards, and translate into cheaper insurance for all?
Did you
That's a
say
loaded
cheaper,
question.
cheaper insurance? I'm going to kick this over to Rob. No, I mean, ultimately, that would be the agenda, right? I mean, if you're able to transfer risk from a motor carrier or a 3PL to a contracting carrier and having them carry primary insurance, then yeah, that would be the agenda, to reduce the insurance cost to that motor carrier, because ultimately, they only have the need for more what's called contingent insurance as opposed to primary insurance. But it doesn't necessarily work the way that it should. And just because you say you're doing compliance doesn't necessarily make it good compliance, right? I've seen certain situations where just in the spirit of getting the job done, you got a truck waiting on the dock and we got to do it, and this guy can't meet the requirements, then so be it. And all it takes is one bad situation like that, and all your hard work goes down the drain, right? So I say to you that, when you look at this from a motor carrier perspective, no compliance or poor compliance leads to primary claims, which translates to primary insurance rates. Good compliance, excellent compliance leads to contingent coverage at contingent rates, which is cost savings. But you can't skimp on it. That's for sure.
Yeah. I think when it comes down to insurance carriers and they're looking at logistics companies, it comes down to the loss ratios, right? So, if you've got loss ratios that are running a little hot, and a couple of those claims are due to the fact that you didn't do proper compliance on those guys and they got hung with a claim, well, you're going to be lucky if all you see is a rate increase. You're probably going to get canceled. And then all of a sudden you go into that dead pool and nobody wants to touch you. And all of a sudden your rates have just, your cost of insurance has just gone through the roof. I don't think there is such a thing as cheap insurance. I don't think there ever will be. What you're trying to do is keep those rates at a decent level that you can actually, make a profit operating under. And that's, it's like with the non-owned and hired insurance. I can't tell you over the years how many times I've talked to people and I've said, well, you got non-owned and hired insurance, and they'd say no. And I'd shake my head and go, you're kidding me. You don't have non-owned and hired insurance. I mean, everything you've worked for your whole life could be gone in one day due to one accident. So, it's now become much more acceptable that everybody gets a non-owned and hired policy, but then how do you keep that cost down? I mean, that's a costly policy. And I know from my old days operating, when you hit that renewal for your non-owned and hired policy, man, it is not a fun day. And, you've got to do all sorts of work to get ready for that renewal. You've got to get fresh deck pages from all the drivers. It's a real pain in the butt. So, but if you don't have all that stuff in place, your rates are going to go through the roof. So like what we try to do here at Openforce is a guy can give you a deck page on a policy, and you can say to your non-owned and hired carrier, hey, all my drivers are carrying 300,000 or $500,000 in coverage. So I want my deductible to be $500,000. And that's the way you try to keep your insurance costs low. Okay. So the guy presents you with a deck page, and then 3 weeks later, he cancels the policy. Now, did he list you on his policy as a certificate holder or also insured? More than likely he did not, because he's trying to keep his insurance rates down. Right. So what we've developed with the assistance of risk is a program where, while the drivers are under dispatch, they're covered under a commercial auto policy, whether it be a 300,000 or 500,000 limit policy. So there is no question of the fact that if he's working and he's under dispatch, the coverage is there and it's in place. He's got to have a personal policy, because that's the only way you can register his vehicle. So that way you're assured of the fact that this guy's insurance didn't lapse and you didn't know it. And that's one way to protect that non-owned and hired policy.
Gotcha. Bryan, you said something interesting about contingent coverage. And for me, the only contingent type of policy that I'm familiar with is contingent liability protecting a workers' comp policy. What kind of contingent coverages are you referring to?
Well, yeah, there's varying different types of contingent policies that are offered in our space. And I don't want to make this an infomercial for some of the carriers that we represent, but oftentimes when you focus on the auto side, you'll hear contingent auto liability, you'll hear truck broker liability, you'll hear, as Rob mentioned, non-owned and hired insurance. Okay, and there's varying differences of degrees of the insurance forms related to each of those policies. They're all trying to accomplish the same thing, which is ultimately to provide a barrier of protection to the motor carrier in the event that the sub or the contracting carrier that they gave the freight to, they sub the freight to, has a loss and it penetrates all the way through. Okay. Now, just as we mentioned before, not all insurance forms are created equal. Not all insurance companies are created equal. And so, on the auto side, you'll run into things like, if the contracting carrier's policy doesn't respond for whatever reason, nor will your contingent auto policy for the motor carrier. Or if the contracting carrier's policy doesn't respond for whatever reason, whatever limit he had on this policy will serve as a deductible for you before your policy will kick in on the contingent auto. Or, if a situation like that occurs where, again, the contracting carrier's policy doesn't respond, your policy, your contingent auto policy, could drop down in the first dollar capacity. So there are varying degrees of the coverage form that I would just advise insureds to be cognizant of. Obviously, your broker should be able to educate you on that, but at the end of the day, you're the policy owner. So it's your job to know those things, ask those questions before the loss occurs, because asking them after loss doesn't make it any fun, right? So you also have, too, on the contingent front, you have cargo forms that can be treated in a contingent capacity as well. This is very helpful when you have operations that are operating more as a hybrid risk, where we refer to these usually as freight forwarders, where at some point in time, they're touching the freight and handling it from A to Z, and sometimes they're brokering it to other third parties or contractors. And the cargo form can actually be split and give you a rating for primary cargo coverage or contingent cargo coverage. And that's pretty unique, but it's very helpful for this class of business.
Excellent. Rob, do you have anything to add on that one?
Yeah, just going back to my my last point, on the there's ever since the computers became so relevant back when I was in my mid 40s, the fraud on the certificate side has grown immensely. I mean, ever since Photoshop was invented, guys, a guy walks in and you say you need to have this, this, and this. The next day he shows up and he gives you photocopies of all these things, and you're looking at him going, well, that looks a little bit strange, and you got to have a trained eye to take a look at these things to make sure that they're not being fraudulent on you, and that's very difficult. And if you get into court and they say, well, this guy didn't have his car wasn't registered, or he didn't have his insurance. Well, he gave us this document. Well, that's great, but he didn't have the coverage, and so somebody's going to have to pay this, and it's going to be you. So that makes compliance just so much more difficult. And one other point I wanted to talk about, I meant to mention it in the opening, was that as far as qualifying for certain contracts, we see that shippers are getting much more, involved in what is the compliance of the drivers that are going to be servicing my customers, through your company. So, and Bryan mentioned the threshold deliveries and the what is the compliance on those guys that are entering somebody's house and installing something? What are their credentials? What do they have? And we see a lot of companies who really go through extensive background checks and screenings on these guys. They'll require that the drivers carry their own cargo policy, their own contingent liability policy, not a contingent liability, but a liability policy, GL. And the amount of claims on those GLs, I mean, it's up there. I mean, everybody's scratching floors and denting walls, and so there's just so many things to look at, and from the compliance side, and where it's going to lead you, and what's going to make what business is going to be available to you if you do a bad job with it or if you do a good job with it. And I think the better job you can do with it, the more business you're going to have, and hopefully you can keep your insurance rates down.
Gotcha.
All great points, Rob.
Thanks, Rob. Yeah. So you kind of brought up something interesting with technology and, being used for fraud, and Photoshop being able to, kind of like weasel its way in there and mess with documents and trick some of these admins into thinking that they've got, valid coverage. So on the positive side of things, how can technology play a role in the compliance front? Can it help suss out the bad, Photoshop, issues with that coverage, or are there other ways that it can also aid in the compliance front? Bryan, would you mind kicking us off on that one?
Sure. I mean, we always talk in the insurance front that insurance is slow to respond to technology, right? I mean, it's just kind of the nature of the beast. But some of this stuff is really bringing these kind of things to the forefront. And what Rob was just talking about for over the threshold deliveries is exactly that. It's a very complex issue, and coverage offering there. And these contracting carriers are required to carry some pretty robust coverages that may or may not get flagged appropriately through, compliance review, So I think on the technology front, you're going to see more automation take place that recognizes things or calls into question certain insurance carriers, because, I mentioned to you just example at the start, don't be just that box checker, right? If we had somebody that is trained or really educated on that class of business, they would know if insurance company X, was on the certificate, we should probably ask if there's a water exclusion, because we've seen that before, so technology can automate that kind of stuff. Those kind of flags can be built into their system so that it can be caught, and questioned, as opposed to just, questioning at the point of loss, which is what's happening right now. So I do think that technology will improve that on both the fraud front as well as, just the whole regulatory front and the compliance side, and making sure we're doing the most effective job possible.
Excellent. Excellent. And then Rob, too, I want to get your opinion on this, because you've kind of seen everything change. It was at one point, like you said, just do you have all your teeth, and now we're here, and technology has definitely grown a lot. And then, so what have you seen, man? Where do you think this is all going?
Well, I think technology has it has been a very big help in this whole sector. I mean, right now, as you go through a workflow with us, we're going to do an immediate ping with the IRS on your social security number. We're going to do immediate ping on your VIN number to make sure that the vehicle you're putting in is actually the vehicle you're putting in. And then, we check out, your driver's licenses, the format of the driver's number, the proper for that state that you're in, so we do as many validations as we can right in the get-go when the guy signs up. And then obviously the documents come in, and if you've subscribed to the review service, we will put eyes on that thing and make sure that it all looks good, and double check with the driver if we think there's anything funny going on. But then when it comes down to the renewal process, this is really where the technology kicks in, because like I said, if you've got 100 drivers and you're looking for 10 documents, you've got a lot of renewal dates that come up, and they just continually come up all the time. And you can't rely on your dispatchers or your doc guys to be out there going, hey, your registration is overdue, or your license is expired, or your insurance is expired. So with our technology, we start to ping that driver on a cadence, and it's usually 30 days out. We'll send them a reminder email saying, by the way, your license is up for renewal at the end of the month. Please submit the updated license, and we will continue to ping that guy, and we will ramp up the frequency of those pings, and it'll be text, it'll be emails, it may come down to phone calls, and then at a certain point, whatever the company desires, maybe it's 5 days out, we start copying them on all the alerts so that they know, hey, I got this guy, and in 5 days he's not going to have a license. And somebody's got to go down and see that guy on the dock and say, hey, you got 5 days to get your license in, or don't show up. I can't use you.
Yeah.
And that's been a big help for a lot of our clients. And, you just got, it's I used to call it canine technology, because you just got to dog these guys constantly. Drivers are just, they procrastinate. They, yeah, I'll get it to you tomorrow. Yeah, I got it at home, my wife said she's going to send it over, and you just got to just keep at them. So, we do it through technology and try to save you some of the pain.
Excellent. Excellent. Thanks, Rob. So Bryan, you brought up some really interesting points about these, tech platforms, and just want to be making sure we're covering all the bases here for this podcast. What are you seeing in regards on the commercial insurance front? And do you see the underwriting process getting any easier anytime soon?
Yeah, I mean, you're starting to see it more. I think it's something, like I said before, the insurance industry has been slow to respond, but now you're really starting to see, the likes of, I mean, every day I turn on the TV, I see advertisements for Lemonade and Hippo, which is, automated homeowners and auto insurance. And so you start to see it on that front. But in the commercial segment, a lot of small parcel delivery companies have really been clamoring for, those real-time insurance results. So you're starting to see more app-based insurance companies, a handful of them now operating in a regional capacity where, an app goes on a driver's phone and monitors the driver's speeding, braking, acceleration habits. They give you a monthly driver score, and that driver score goes into a monthly insurance rate that's used to assess a premium for you. And it's good. I mean, I think it's something that the industry has been looking for a while. I mean, a lot of times we'll get insureds come to us and say, hey, I'm going to install GPS on all of my vans, and the guy that's selling me the system tells me I can save 15% of my insurance. And it's kind of like, no, it doesn't work that way, right? I mean, insurance is all about, results, right? And show me your performance, your loss performance and how that works and how you've improved it over time, because oftentimes you'll get GPS installed in your vehicles, but you don't follow the monthly subscription in terms of driver recommendations. And as a result, there's no loss performance improvement, right? But the guys that are going the extra mile to actually stay on top of it, they'll see it and they'll collect that information over time, and their loss performance will get better, and they'll be entitled to better rates, so to speak. So these real-time apps that are coming into play from insurance carriers, that's a technology being born on the insurance side. So they're monitoring, the telematics, if you will, of the delivery company and applying their own rate based upon what they're seeing. Now, I would just tell people, careful what you wish for, right? Because now you're really letting insurance carriers and underwriters behind the curtain, of your operation. And, if you're a good operation, that's of no concern, right? But, perhaps you might be in a situation where before, on some of more of the antiquated policies, you might have been asked to estimate sales or estimate mileage, and your premium would be assessed annually and wouldn't be trued up or audited. Well, now in these real-time, platforms, that stuff that's going to be real time. And so too will the exposure real time and adjusted. And you might end up paying more than you would have under the old way. So technology can be good and bad. It can be argued both ways, right? But I do think it's coming, and I think it will ultimately be good. And I think it's been something people have been wanting.
Excellent. Robin,
and I'd like to add to that. I mean, as
Yeah.
far as the GPS tracking and everything of the vehicles, I mean, it's been a long discussed situation here where is that too much direction and control on the driver? But really, when it comes right down to it, in any kind of a legal case, safety trumps everything. So if you're doing it for safety purposes, then it's not going to be a classification issue. It's going to be basically a safety issue. So, and one other thing, from the underwriting standpoint, we're noticing a lot more of the underwriters are requiring specific language to be put into the driver's contracts, so that they can point to that, because every insurance underwriter looks at this and says, okay, I'm going to write this policy, and I know I'm going to court at some time with one of these drivers. And what's my exhibits going to be? What's my defense going to be? So they'll require that your contracts with your drivers carry specific language. And a lot of people, they go, oh, I got this, I can get this policy finally. Oh, now I got to re-sign all my drivers, and that's always a nightmare. So it's an ever-changing situation.
Yeah. Before we kind of wind things down and wrap up, I know some of my clients would be really upset with me if I didn't ask this. Is with the current driver shortage, what kind of role is compliance playing in that? I know, like I kind of said at the beginning, a lot of people when we talk about compliance look at me like I'm Toby from The Office and everything, and aren't really happy with me when I bring it up. But what are your thoughts on that? Is it affecting the driver shortage at all? What role does compliance have to play? I'll let Rob kick this one off.
Yeah, well, obviously recruiting is such a difficult task these days, and retention is also very difficult. And you've got things like, the DOL now that they basically canceled the new Trump rule. They went back to the economic realities test. So really the best way to classify a driver is to, be able to prove that he has multiple income streams. And then it comes down to, okay, he's going to work for these three companies, and they all three have different compliance standards or different insurance standards. How do you satisfy that so that the driver can work for all three of those companies and meet everybody's underwriting criteria? So, I think it is a challenge. I think it's something that, I know we're working on it to be able to say, okay, this driver is, he's a whatever classification you want to give him, but that means he has met all these specific criteria. He has these policy levels in place, and he's ready to go. But it's a big issue. Right now you try to recruit a driver, and they're so few and far between. And you say to them, well, you know what? You got to have a $500,000 commercial auto policy. You got to have this. You got to have that. And he's just looking at you going, well, that's going to cost me $7,000, and I won't get paid for the first 2 weeks. And how am I going to recoup this? And they just walk away and they go to Walmart, or they go somewhere else. So yeah, it's difficult, but we're working on some solutions.
Excellent. Bryan?
Yeah, I'll just add, it's definitely an industry-wide problem. It's something we've, heard about the driver shortage for a long time for the class of business. I think the pandemic has certainly accelerated it even further because delivery class is exploding, especially home delivery. But the labor pool has shrunk because unemployment benefits, and stimulus, right? So it's definitely an issue on people's minds now. And when you throw compliance into that realm, particularly with the market that we're in. I don't think people understand on the insurance front, we're going through one of the hardest auto insurance markets we've ever seen. Okay, and that has a lot to do with things we haven't discussed here today, but nuclear verdicts, for instance, hammering auto insurance carriers year over year. They are operating 10 years plus now, operating at 100% loss ratio across the board within transportation. Okay, so what you're finding is auto insurance carriers just bailing out of the class of business, which is making the pool of insurance options lesser and lesser for these guys to go get. So, as Rob points out, you're tasking these guys to now go and get maybe more of a robust coverage option, particularly in the last mile, over the threshold space. And you're tasking them to do that in a market that's very tight. All leads to less options for them, less labor pool for the delivery company, which is a problem, obviously.
So it sounds almost in a way like it's a kind of a simple supply and demand type of, scenario here.
Yeah,
could be. It's really just a matter of, obviously, if I'm a 3PL or if I'm a motor carrier, aligning myself with some good partners, that can ultimately solve some of these problems for these guys, whether it be the likes of an Openforce or the likes of a Risk Strategies, or somebody else, but I think you're at a point now where just telling them, hey, you got to have coverages X, Y, and Z isn't good enough, because they'll spin their wheels trying to find somebody down the street, an insurance broker that has to do it. They can't do it. And then they come to the table with poor coverages. I think it's a point now where some of these guys are these 3PLs, motor carriers are getting, partners with other insurance vendors that can offer them like program offerings for their labor pool, their network of drivers. We do that all the time. We'll structure particular insurance offerings for some of the 3PLs and say, okay, if you're working for this 3PL, here's the coverage offering. So when you come to us, we already know you'll be in compliance as soon as we quote it. Right. So you'll start to see more and more of that take place.
And to that point, that's where we've started going down the road of trying to get as many underwriters to go along with programs that are pay as you go for the drivers. So, they don't have to necessarily go out and foot the bill for the down payment of 50% on a policy. They can basically step right in and, when they're working, they've got cargo, they've got GL, they've got, the proper auto. They don't work a week, they don't pay a week. And that's the way I think it's all going to have to go eventually. It's fair to the drivers. If a guy's doing one run a week and he's making $100, should he be paying the same, as a guy who's making $1,000 a week? So it's equitable for the drivers. And I've been saying this for years to underwriters, and maybe Bryan, you could help me try to get the point across to some of them. I actually think from the non-owned and hired side, they should be charging as a pay-as-you-go, because you really don't know as an underwriter for a non-owned and hired carrier that you start the policy off. The guy says he's got 100 trucks, and at the end of the year you audit him and he says he's got 80 trucks. Well, did he have 100 and then 140 and then 130 and then down to 60? And, what was your actual risk through the course of that policy? So if you use somebody like an Openforce, Brian, we could basically collect that premium from the companies on a go forward basis, and you would know exactly they had this many guys on the road that week, and here's the premium per day or whatever. But I'm just dreaming here. So
You might be onto something there, Rob. Might be onto something there.
I'll tell you what, I've been singing it for years. Nobody wants to listen to me.
Excellent. Well, gentlemen, really appreciate you both joining us today. Any closing thoughts, Brian, before we wrap this up?
No, I would just say, appreciate the opportunity to be here today. I mean, compliance is a critical component, of both on the insurance front, as well as the regulatory front, as Rob had mentioned. So it's not something that can be skimped on. It has to be something that's taken seriously and followed through. Just saying we do compliance isn't good enough. Making sure you're actually paying attention to who's coming through the door, what, when, and why, and how, is important, because catching it on the back end, it stings, and it can, when that happens, as Rob mentioned before, and you become uninsurable or your premiums go through the roof, nobody feels good about it. So the more and more you can do up front, the better.
Yeah.
Thanks, Brian. Rob?
Yeah, and I would like, compliance is just one of those things where it's the necessary evil of our business, and it is so hard to manage and so hard to maintain, and it's you'll pull your hair out trying to do it. But when you look at whether it's an agency requirement from the government or an underwriting requirement, or you've got those civil action attorneys out there who are just looking for any crack in the armor they can find, and they're going to just ruin your life. So, it's just one of those things that you just have to be diligent on it. You have to put the resources that you need to put into it, because, if there's anything you don't want to skimp on, it's compliance.
Definitely. Well, thank you, gentlemen, and thank you for joining us today. This has been a great discussion. I've learned a lot. I hope our audience has learned a lot. I'm sure they have. And to our Openforcers out there that listen, thanks for joining us on this, our second episode now of the Gig Academy.